Best credit score to buy a house. Top 3 tips. Ever wondered what your credit score should be to qualify for a mortgage? Do you get a better rate if your credit score is higher? Well, these are all common questions, and if you've been wondering these, throw yes down in the comments below. Now, as a mortgage broker for the last 10 years, I've helped countless amount of people get approved for their mortgage and help them find a home. In this video, we're gonna go over things like what is a credit score? What is on a credit score? What is a credit score made up of? What credit scores lenders are looking for? And at the end, I'm gonna have my top 3 tips, including how to increase your credit score so that it's most appealing to lenders, and you don't wanna miss that. So let's get started. What is a credit report? Well, it's a summary of how you've handled all of your credit accounts. It's got your types of accounts on there, your payment history, and other information that lenders and creditors have been reporting. Now, in Canada, there's 2 main companies for credit reporting agencies. It's Equifax and TransUnion. What is on a credit report? Well, it's got your identification information. So things like your full legal name, your SIN number, date of birth, your address. It also has your credit history. So the types of accounts that you have, credit cards, lines of credits, the balances, the credit limits for them, and your payment history. It's got inquiry information there as well, which has your hard credit checks. Now, it's important to know that there's 2 different types of credit checks. There's the soft credit checks, which is the credit checks that you perform on yourself. You can do this as many times as you'd like, and it will never affect your credit. Hard credit checks are from institutions or companies that want to check your credit score to be able to offer you the products and services that they have. So it's important to know that if you have a lot of credit checks, hard credit checks, in a short period of time, it does negatively affect your score. Now, it also has other things such as your bankruptcies and collections. What is your credit score made up of? Now, this is very important to understand, so pay close attention. Because if you understand this, then you'll have a better idea of how to increase your credit score in the future. So there's 5 different factors that make up your credit score. The first and biggest one is your payment history. This makes up for 35% of your score. And it basically shows the lender that your ability to make your payments on time at the end of every month. The second factor is used credit versus available credit. Now, this makes up for 30% of your credit score. And what this means is you want to make sure your balance is lower, typically within 30% of what your limit is. If you do that, your credit score will be better. The third is your credit history, and this accounts for 15% of your credit score. Now, this takes into account how long you've had your credit accounts for. The longer you've had them, the better it is, because lenders want to see that you've been responsible over a period of time with your finances. The fourth is public records. Now, this accounts for 10%, and this shows any prior history of bankruptcies and or collections. And the fifth one is inquiries, and this makes up 10% of your credit score. And this is when you really apply for other credit accounts. And it's considered a credit check though, so you want to make sure that you don't have too many of these inquiries in a short period of time, or else, like I mentioned earlier, it could negatively affect your credit score. What credit score are lenders looking for? Well, lenders and insurers are looking for a minimum beacon score of 600. Now, if it's less than 600, then you may have to look at alternative lenders or what we call B lenders. If that's the case, there's usually fees involved and higher rates. Now, you'll qualify for a bigger mortgage if your credit score is 680 or higher. Now, contrary to popular belief, lenders will not give you a better rate if your score is higher than 680, but it provides a stronger application, which means you have a higher chance of getting approved. So the best credit score to buy a house is 680 or higher. We've gone through quite a bit of information, so if you ever want to re-watch this video in the future, hit the like button and the save button, and that way you can always refer back to this information. Now, let's get into my top 3 tips. Tip number 1, get started on the pre-approval process long before you think you're even ready to buy. The reason why you want to do this is because lenders typically want to see 2 types of credit for a minimum of 2 years each. And if you have bruised credit, then it gives you time to fix it. There's a lot of things that you need to know about the mortgage process, and it never hurts to get educated on it far before it actually happens. Tip number 2, work with a mortgage broker. Now, I'm not trying to be biased, but I kind of am. Here are the facts. If you wanted to get a pre-approval at different banks to see what rate they will offer you, you're gonna have to make 3 appointments, drive to 3 different banks, fill out the application 3 times, and see 3 different people. Who wants to do that? Plus, if you remember what I said earlier about hard credit checks, if you have a lot of inquiries in a short period of time, it will negatively affect your credit score. Mortgage brokers only need to pull your credit once, and they can shop your application with all the lenders that they work with. No driving around multiple times or wasting time. Tip number 3, how to increase your credit score. Now, remember what we mentioned earlier of what makes up your credit score. It's your payment history, 35% of your score, and your used credit versus your available credit, 30%. Now, it's super simple, guys. Pay your bills on time and use your credit cards or lines of credits once a month so that it gets reported as an active credit. Now, schedule a reminder. Put it on your phone, on your computer. Ask your dog. Make sure you schedule a reminder 5 days before the actual due date. Now, the next part is keep your balances to no more than 30% of your available limit. Did you guys find all that helpful? If so, type in yes down in the comments below. And if you like more tips on the mortgage and the real estate side, hit the subscribe button and the notification bell so you know when our videos will be coming out next. We have videos coming out every week, and we would love to answer any of the questions that you might have. Just throw them down in the comments below. So thanks for tuning in, guys. My name is Felix Chan with the LiveInnerCity Real Estate team, helping you keep real estate simple, and we'll see you in the next video.